Continuing our discussion, looking at bank trading setups and understanding the tactics involved with trapping volume in the wrong direction or in a direction, and then hitting stops in the reversal direction. And these trades are my best trading setups. So I'm looking to copy what the smart money is doing and then piggyback on those moves. And as you'll see, we'll see the same setups showing up over and over again. Now, when we look at gold, we see the market has come down in Asia in one push, two pushes, and then a third push. But this is the most important part. We're heading into our Europe-London window, and we have the market coming down 25, 50, dropping down, extending outside of our 12 candle window. So 3 hours for a high and a low. Then it extends out and pulls back inside. In the last hour between Asia and the Europe Open, we get a move down into the open of the session. So this last bear candle is the last candle of our 4-hour window. When we go to our 1 minute chart, we are at the low of the day. So we have our low of the day heading into that last hour. Now, some traders may already be short in this trade off of 50, recognizing that that last hour of Asia gave a short sell setup. But again, we have lower highs. We already have come down 25, 50, 75 pips, 3 levels of drop. Now, this is the key. The market goes into the open of the session. This first bear candle down triggers 1-hour traders, 4-hour traders short into the market. Immediately pulls back. Our opening price is at that 25 level. The market gives us a peak formation low. Okay. The trend is down. Traders are selling this first mouse, second mouse. We get our little bar, our little bull pin hammer, and our engulfment candle. Now, traders, there'll be traders who email me and say, how did you know to go long? Why did you take this long? That's not a long. But when you understand what's happened here, and you understand that this setup shows up over and over and over again, and that the importance is understanding the timing window, how price has behaved, and that this little 1-bar stop on the 1 minute chart on gold is giving me an extended W. This pin is a trap. Getting people to think that this is a stop hunt down and they're going to go long. They get caught going long. They get stopped out. They don't want to go long now. But this setup will show up over and over again. Now, we go back to our 15-minute chart. Somebody has traded the engulfment pin hammer in the Asian session for the short trade. We talked about this earlier in the week. We had a high. We had a low. They hit the stops. 3 pushes into the close of the U.S. session. They made a high, 1 push, 2 pushes, and a 1, 2, 3. We had a high and a low. We get a bear pin hammer at the high of the day for the 50 pip move down. Now, this trader is in the money. This trader is in the money. Now, when we go back to our trade setup, which again is a trade I did take, how does price behave when it gets to these levels? We know that our short trade is up around the 75 level. We're getting filled below 25. It's a 1-bar stop, and in this particular case, we're looking at roughly 10 pips with our spread. So the market behaves immediately as it should. So if you're entering in on the engulfment, the second candle, whatever that may be, this vertical move, which again we're going to go through and look at 4 examples of very similar, identical setups. Stop onto the low of the day. We're at the low of the day at numbers. At the timing window, this is a 15-minute. This candle closes back up above the number line on this little bull candle that breaks back above the high. This is a 15-minute. This is a 15-minute pin bar hammer on the charts after a stop hunt to the pin low, which was the breakout pullback continuation that put in our peak formation highs, 75 pips from the high, 3 levels of drop. But also we had 1 push, 2 pushes, 3 pushes down, and we have a trader who's in profit. And we have our extended W setup, a 15-minute reversal bar. So even if you got in on the 15-minute candle, this trade still gave traders 40 pips of potential profit target. So again, stop hunt to the low of the day in the timing window into our new 12 candle window. They trigger other time frame traders. They trap people on the first mouse. They hit it a second time with a vertical candle, which is our confirmation that this is a blow off move. Okay, 1 push, 2 pushes, 3 pushes down to the low. A little bar at the bottom for our entry back for the long trade. It breaks through the high, pulls back to 50, and then we get the blow off move 25 pips above the 50 pip level for the 50 pip stop hunt back up, getting traders who are in profit again from the pin hammer short into the session. So this is a playbook setup. 3 pushes from a profit target into the session timings, extending it out. So we're extending to the low of the day, 3 pushes, and then triggering other time frame traders. We get our W reversal with a little bar, a 1 bar stop at the low of the day for a fast stop hunt back up, getting traders who are in profit. Now the market, you'll notice, pulls back inside. So we have a higher swing low inside of this consolidation. So this is technically one large consolidation. The market then pulls back in the gap time. So here's our high and here's our low down here. There's our high and our low now. The market pulls back in the gap time, makes an engulfment, and gives us a higher low. This is inside. This is after we've had our 50 pips. We're gone. We're done. We're off the screen. We come back later. The market then hits the stops. The market then engulfs and gets traders going long again and hits the stops on traders that were short. Now you'll notice we're inside of the high and the low. The market then, very similar to our previous 1 push, 2 push, 3 pushes, has done 1 push, 2 push, 3 pushes down into the low of the day on a 1, 2, 3. So again, as we're heading into the 12 candle window, we have a stop hunt back down towards the low of the day. So again, we draw our low of that consolidation. We know we have a low of the day back over here. We'll put our stop where if traders haven't taken any money, we'll put our stop there. We have just before the session starts, we have a redrawn high of the day, but we also have our 15-minute trader who's in profit, who they've already gone back up to hit stops on. So if traders, even if they shorted the small bar, they've already hit stops up top. Now they've gone back down towards the low of the day. They hit the stops, and again, we'll just review. The average stop hunt is 25 to 50 pips. The market consolidates at 50 and then proceeds to go 25 pips down. Some traders will already be in this move down to the low of the day because they have seen this before and they were in the trade, which they know potentially may be a stop hunt to the low of the day. But if we come to the screen, we see a stop hunt to the low of the day in the timing window. And again, understanding that we have just now triggered 4-hour traders short into the market. We've hit stops on 1-hour traders that were long off the break of the previous hour's highs up top. So we got traders going long on the break of the 1 hour. They come down, they hit stops on the 1-hour trader who was long. They trigger 1-hour breakout traders short. They trigger the 4-hour trader short. They hit it a second time. Then we get our little bear candle for our third burst, and we get our bullpen hammer. But understanding that this consolidation, this whole consolidation sideways underneath the stop hunt is in our first 15-minute candle. So this consolidation was an opportunity for traders to enter in on this bullpen hammer, 1 push, 2 push, 3 pushes entry, understanding the first target may be the high of where the session began, but ultimately we're targeting the high of that peak formation that started the move down. Stop hunt low, consolidation, engulfment, pin hammer for a fast 50 pip move back up using my 15-minute levels. Same setup as before, just a different variation. Instead of the extended W, we get the W at the low of the day, bullpen hammer engulfment. Even if you took the small little bar, you still got 50 pips. But again, if you took 25, if you took 30, if you took 40, 35, whatever that is, the trade offered you 50 plus pips on 1 push, 2 pushes, 3 pushes, hitting stops back to the high of the London hour. Now, I focus on that first couple of hours, but when I go into the new day, I'm looking at the same setups. So we look at what happened. We get a high of the day put in place in the US session, but we also get a higher low put in place, locking in 75 with a shortened W formation and a middle structure heading into the new day. So again, thesis being we have breakout traders now in the market. They triggered the previous daily high before pulling back and hitting that in 3 pushes before locking in 75 and going into consolidation into our new day. So understanding then that we have breakout traders in, but they've also locked in the previous day's low, and we had a day zero scenario, narrow range day, locking in the high and the low, going into consolidation, triggering breakout traders early in the potential direction of where they may be heading. We have a pool of volume consolidated in a channel heading into the new day. We get a breakout pullback inside bar for a vertical move. Now again, I'm only going to be focusing and showing you the same short reversal trade setups, the W setups that showed up. But we'll look at this 1 bar pullback. So again, first mouse chasing this long, but breakout pullback. We go to our 1-minute chart into the next day's Asian session. We have our rectangle heading into the day. So we've got our 4-hour traders. We'll redraw that. Our 4-hour lows heading into the new day. So we have 4-hour traders, our high and low. We got our new day high and low. We'll go back and redraw our 4-hour high. And we have a trigger breakout at the beginning of the day. They pull it back, make a lower high, and come down in 3 pushes, making a triple bottom W reversal, but it also triggers stops on people who may have been long on the break of the highs for hourly, 4-hour, whatever that may be. First mouse. Then they come down and they lock in the low with a extended W formation on a 3-push pattern. Again, we're on the 1 minute here. Off numbers. This is prior to the session. This is prior to our session opening. So we've now got a low of the day potentially in place, and we have our high of the day in place. Now, come back to our original premise about high and low, and then expanding the range, hitting the stops, whatever that may be. They expand the range further, they go up even further before coming back prior to the Asian window opening, and they keep going higher into the open. They break through the double zeros. Again, we possibly have traders long into the open that may have been in early on. They saw this setup. They thought this was going to blow off and possibly keep going through the previous day's high. They go to break even when it breaks the zeros or when they get the engulfment. The market then comes back hitting stops. Going back to our bias, though, is that this market has broken out and gone into consolidation. I'm expecting a long trade, but I know that I want to see a stop hunt before I look to get into the market. First mouse, second mouse. Second mouse gets the cheese. So we have a new high of the day, and then the market, again, just coming back to that premise, we have end-of-day traders in the market, but the traders who were short, okay, this pin has hit traders at break even, but we know there are stops above that high, which is obviously the previous day's high and low. The market goes up before pulling back, works it a second time, works it a third time. This potentially now is a sell setup. So we've got our sell set up off a double, zeros, 3 pushes. We got higher lows, but we think this market was in a blow-off mode for a long trade. That may be the case, but again, we want to see stops get hit. We have our rectangle heading into the session. The market continued to expand the high. It worked the high, it worked the high, it worked into the high with 2 more pushes before stop hunting down and pulling back. Traders take the short trade for the continuation, assuming this market now may be rolling over and heading back down towards the lows of the US session. Remembering though that we had a W reversal and a consolidation and a breakout pullback in line with this reversal. So again, if we had a high and a low, the market is working into the low. These are all the things that go into preparing for the session open, having a plan. I'm expecting this market to go up. I could see a stop hunt high, stop hunt low before we get the vertical move. The market does exactly this. Double inside bar, breakout, consolidation, bullpen hammer. Again, some traders are long right off the bottom. Other traders want to wait and be patient. We're getting towards the end of the hour. So again, 45 minutes, working the high, 30 minutes down, and then we get our reversal. But into the end of the hour, now traders may be waiting for the break of this high, whatever that may be. It's still, even if you traded the break of the W, we have 86 as our high, 88 with our spread, 75 as our low. You're looking at 12, 13 pips maximum risk on this stop. But again, targeting that we're potentially going to be taking out yesterday's high, and that market, that high of that day is up at 35, but most stop hunts typically are 25 to 50 pips above or below the range. With gold, I expect them to go a minimum of 25 pips into a high or a low as an extended stop hunt. So think about it in terms of psychology. Traders will hold on to a loser because they hope it turns around because they're at the high or the low. But the best way for the market to get their money is to bend their arm even further, at least 25 to 50 pips. Anyways, the market behaves as it should and explodes. Again, remembering that these consolidations, this day zero consolidation potentially now is fuel for an explosive move. The market moves and goes 50 pips in 3 bursts before pulling back where at major round numbers. So again, if you're in here and it's just a consolidation or you shorted this, you're taking money off the table, 25, whatever, on the second push. You definitely should be locking something in down low if you're short. But recognizing also, coming back to our plan prior to this session, this cluster of volume. Okay, W, 3 pushes, a breakout pullback for the continuation from this day zero setup for a long trade. Being prepared to reverse, take money, and get in long for the move back up through the high. So again, working from the high and the low. Now, we saw the same setup that we see on Tuesday, the same 3-push pattern down. We see the same 3-push pattern up. 1 push, 2 pushes, an engulfment in the gap time for the 3rd push to the high. So again, we're talking about the timing window. I'm not talking about these trades. I'm talking about recognizing when there's been a 3-push pattern heading into a session, 1 push, 2 push, 3 push pattern, bullpen hammer. We get 1 push, 2 pushes, 3 pushes into the session close. It's actually a 33, 1 push, 2 push, and then 1, 2, 3, 1, 2, 3 to the high. Engulfment, bear pin hammer. Who is in the money? This guy is the inside bar guy on the 15-minute chart, which was our W on the 1-minute chart. He's in the money. Yesterday they were 50 pips away. Today they're 75 pips away. So engulfment, bullpen, bear pin hammer. We go to our 1-minute chart. Now again, remembering prior to this hour ending, the market is consolidated at 75. When they break out, 1, 2, little bar, 3 engulfment, we now have 4 hour. and 1 hour traders triggered into the market at the high of the day. Not only is this the high of the day, it's the high of the week and currently the new high of the month of April. So we have high of the session, high of the day, high of the week, high of the month. Now, come back to what we just looked at previous. In the US session, we had the low of the day, low of the session, low. It took out the London session lows, but in the London hour, we had low of the day. They triggered other time frame traders into the market. They extended out for a second hit and then reversed it for 50 pips. In this particular setup, okay, we have a trend. By all technical accounts, we have a trend, but this is key, understanding that we have higher lows into this last 45 minutes, heading into the new high. Higher lows, this is fuel. Then what we have is other time frame traders triggered into the market. So if you're not willing to trade this, again, this is a 1 minute chart, but if you're not willing to trade this, be understanding that when this market reverses underneath of this 1, 2, 3, which is the very beginning of the new hour, drops down and goes into consolidation at the end of our 15-minute candle. So when we look at our 15-minute candle, this engulfment with a pin bar on top, this is the pin up top, the 1, 2, 3. Now, these other time frame traders are now caught. The minimum I expect this market to go to is down to 50. The minimum is 25 pips because we have these higher lows caught in the market. And the move off of double zeros and again in the gap time. So coming back to the understanding that when they start to work the low like this, I'm already thinking 3 pushes for a squeeze. And when? I'm going to come back in my US session 12 candle window. Now in this particular case, I come and look the hour before. The market's already taken off. If the market has already taken off and it's in trend, what would we expect? We expect either a continuation or we expect a stop hunt into the trend as we head into our 12 candle window. So again, coming back to our basic premise about high and a low, hitting the stops, trend. So we have higher lows. The market continues to work higher. We get into our 12 candle window. We have 1 push. We have 2 pushes, again up to numbers, 3 pushes and an engulfment. Traders short this. They're at the high of the day. They got an engulfment after a 1 push, 2 push, 3 push, and again the same pattern. So we've now got 4 hour traders in the market. We got 1 hour traders triggered in long. We've got higher lows. So again, and we've got traders who are in profit, right? On this, they've chased the move. Notice this big candle gets traders chasing the move higher up. But understanding that other time frame traders are now triggered in the market doesn't mean they're wrong, but it means that we get the 3 push pattern in the engulfment, same scenario, cluster, and then another hit to the high for a 25 pip stop hunt back to the inside of the low of the session. So again, we get a continuation move. Once this goes into consolidation sideways, 1, 2, 3, small bar, little bear candle as our last grab at the cash. Cover this, take the money off the table if you haven't already locked in 25, because again, at this stage, we are already aware that they have locked in the low. I'm looking for them to be going back to hitting stops at the high of the day. Why? Because there's stops up there. This is a breakout market. Breakout, pullback, 3 pushes into the low, engulfment for the squeeze, breakout, pullback, stop hunt into the trend. This is a long bias trade. I'm long bias. So if I was to short this, I would be thinking 25 max. It's a counter trend trade. We're already locked into a long trade bias trade entry. And again, our fundamental premise is that we're going to go back to the high of the day. So when we bring our trade back up, we know now we've got an opportunity to possibly go long again. This is an example of a continuation move into the trend. But the market, again, into our first hour, sets a high and a low. They expand the range. They come back inside. So go back to our premise now. So the market comes back inside if you haven't taken 25. So you're looking for the long. the same scenario happens again. They come back down in 3 pushes, 1 push, 2 pushes, 1, 2, 3, engulfment pin hammer at the low of the session. So although that we are long biased, they can still come back against the trade in 3 pushes, consolidation for the bull pin hammer reversal back in line with the trend. They hit the stops. They immediately trigger breakout traders long. So understanding too that although they now hit the stops, they've got the break-even trader from the London session stopped out. They also have now hit the stops at the high. They've also triggered breakout traders. And this is also the first hour. So again, we have our high and our low. We're in our trading range, but they come back down to the low of the day in a market where we have a long bias. We're looking for a consolidation W reversal. We may have went long here. The market goes up in 3 pushes, reverses with an engulfment, 3-bar reversal. If you haven't taken any money off the table, you'd be taking it off there. Market comes back down in 3 pushes. 1 push, 2 push, 3 push, goes into consolidation. We're into our equity hour now. This market we are expecting now should either move or we could be in a trading range for the rest of the session. It goes up and hits the high and goes into consolidation for the continuation long. Again, just looking at the short setups, the market sells off in Asia. 1 push, 2 pushes, pulls up in the gap time and comes down 1, 2, sideways 3 into the open. So again, a 75 pip move. 1, we're in the upper box. 2, almost 3 levels of drop, 2 pushes, pulling back, and a 3rd push down. So again, the same pattern. 1 push, 2 push, 3 pushes into the low. Just a subtle different variation. The same trade setup. There's our high heading into the session. There's our low. The market does a creeping trend. It does a 3 push pattern reversal. In the last 15 minutes, comes up in 3 pushes, 1 push, 2 push, 3 pushes, sells off in vertical, 1 push, 2 push, the W reversal with the bullpen hammer at the low of the day. Again, the low of the day setups, stop hunt, consolidation, W reversal. It might be a shortened W. It might be an extended W, as we saw on Monday. It might be a sideways W. But stops were hit at the low of the day. W, bullpen hammer for a 50 pip, 40 pips from tradable, roughly from numbers up, but 50 from the low pin hammer to the high. But the setup, the consolidation, stop onto the low after 3 pushes, W reversal, fast, aggressive move back. You're done in 45 minutes. So we see the same setup in the U.S. Open. 1 push, 2 pushes, and a 1, 2, 3. So we're at the low of the day heading into the U.S. session. And look who they got stopped out. The guy who went long on the reversal the day before. But again, this is just as we're heading into the window. So we head into the U.S. window. We're at the low of the day. We have our consolidation again. Consolidation. We're at the low of the day. I'm not necessarily looking to counter trend, but I'm looking for this setup. I know that there's traders. If we come back to that chart, somebody's shorting this. They're in profit. Okay? Somebody shorted it up here. They might have chased it here. So they have break-even stops in this area, but they also have their stop loss above, even the lower one is above that lower high. So we're looking at the lower highs at 84. So we go to our 1-minute chart. We're below 25. So we're well within our 50 pip target of hitting our 50 pips if we get the right setup. What do we need for the right setup? We need a stop hunt. So we're at the low of the day. We get a consolidation. We're in a down move. 1 push, 2 push. This consolidation is key. Understanding this consolidation. This is a trap. We're going to look at an example from this morning. This consolidation is the key. They come into numbers. People go long here. This is just a continuation and a pullback. They lock it in with an engulfment short. Traders short this. They get hit. The market drops down and gives a bullpen hammer, getting people to go long. But the market has not given us our W reversal. They're giving us a 3-push pattern up into that down move. Then we get the vertical candle and the bullpen hammer at the low of the day after the stop hunt. Consolidation, vertical candle, bullpen hammer. Not sure. It pulls back in and goes sideways. We get the double inside bar and the burst out. So if you're not sure and they come back inside, as soon as it breaks the high of that inside bar, I'm long. This is my lowest risk area to enter the trade. What's my thesis? My thesis is that they're going back to get traders stopped out who are in the money. Same setup, 3 pushes to the low, consolidation, hit the stops, short and W, bullpen hammer. I'm looking for the little bar at the bottom with the bullpen hammer. Now, you're going to see the same setups over and over again, and it's important to understand when you're in a trend versus when you're in a stop hunt. So, again, asking yourself, who's in the money? Where could this trade fail? Where are the levels? What type of price action do I need to see happen? 3 pushes to a low, to a high. This is the same setup, just a different time, different variation. Look at today. Consolidation. We have a sell-off from the U.S. session. It goes into consolidation. We have a lower high with an engulfment. The market pulls back into our 12 candle window, the beginning of Asia, for the blow off down through. It looks like it's going to roll over and go down. When we look at our 1 minute chart, we see the consolidation inside of 2 pins for 1 hour this morning. 1 hour sideways. No movement through the high or through the low. We have a bias to the downside. We have a short trade in progress, and we have an engulfment in the lower high locking in above 75. The market then proceeds to break out and blow off. Breaks out, pulls back. We now have a new low of the day. People are going long on this move when all we have is a breakout pullback. They get in long, but we do not have our extended W or anything else. This is just a breakout pullback continuation, and then a vertical candle trapping. A big candle is a vertical move like this. Inside bar is a trap. Traps traders long. The inside bar is the continuation for the short trade down, if you were short already. Again, there's, depending if you were filled somewhere on the 3 pushes to the high, you may have been short coming out of that move in line with the overall existing trend from the U.S. session close. But we get the vertical candle out of the cluster. Stop hunt, cluster at numbers, vertical candle, inside little bar, 1 bar stop. If I'm wrong on this trade, we're risking 10 pips roughly. But we know there are lower highs. We know there are stops above this candle that shorts just chase the move coming down. 1 push, 2 pushes, 3 push, vertical move blow off. As soon as the market closes above that last high before the low, I'm at break even. My thesis is that this market should at least go back to the high of the session, which it did. This is a same pattern. Hit the stops, 3 pushes to the low, inside bar, vertical move for the fast stop hunt back up. Now, in this particular case, this market, again, my thesis earlier on was that the market was going to go back up to get the trader who was short up top. So the first mouse gets caught early in the session, but the market was in a downward move. 1 push, 2 pushes. It needed that 3rd push to the low. Hitting stops on traders that were in early in the gap time prior to the market opening. It hits the stops, consolidates, gets traders in early, first mouse long, 3 pushes down, a blow-off candle, inside bar. This is the same setup for the fast move back up, the consolidation, the stop hunt back into 50 on traders that chase the leg on the close of the 15-minute candle. So again, if we look at this chart, traders get in long on the pin bar, breakout pullback, engulfment, bullpen hammer for the fast. Currently in a move that will probably be 50 pips back to the previous high of the U.S. session short trade. So again, understanding 3 pushes, consolidation, stop hunt, clustered volume, a vertical candle, shortened W, extended W, a 1, 2, 3, whatever that may be. But I need them to go outside of the consolidation and hit the stops. So hopefully you got value from that, traders. We're going to go through in the next video the pound and the euro, the same principles, the same setups, a little different behavior, different currency pairs, different timings in terms of when they show their behavior, but gold tends to move in all three sessions, but we'll show the same setups on those pairs. So forget correlation or anything else. It's mastering the setup and recognizing it in live time on a pair, having a thesis going into the session. That is a bank trade setup. Trap traders in the wrong direction. Trap them in early. Hit the stops one more time. Reverse the market fast and furious. Go back and get the trader who's in the money, who hasn't taken it off the table. And not only just get him out at break even, possibly get him and bend his arm and go 50 pips the other direction into his trade. So hopefully you got value from that. Identify your best trade setups. These are bank trade setups. Master them. Don't settle for anything less. Know the variations of those. Stick to those. Learn how to scale them up in size. Have a great session and may the market.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.